Good Thursday morning, Market Chameleons, and everyone joining us for the first time. Thanks for coming by and checking out the Market Chameleon pre-market show with this man, all the way from the city of brotherly love, Dimitri Pargamonik. How you doing, D?
Good morning, Will. How are you?
Great. You want to start with the disclaimer?
Yep. Good morning, everyone. Before we get started, keep in mind, Will and I and Market Chameleon, we're not a registered investment advisor. We're not a broker dealer. We're not telling you what to do. We're just sharing ideas. Will, I don't think you put that disclaimer up.
Oh, really? Ooh, it's the old. There you go.
But
you see that?
Yep. So there it is, everyone. If you do need advice, call your registered investment advisor, call your broker. That's what they're there for, to give you advice, provide you with guidance. There's the disclaimer.
Excellent.
Okay. And while I'm sharing my screen, if anybody is joining us for the first time, Will and I, we do these shows in the morning to help answer questions you may have about the Market Chameleon tools, the data, analytics. If you want to come on a show and ask your question live, we provide a link to Zoom. Click on that link. It takes you over to Zoom. Once you're in Zoom, click on the button, raise your hand at the bottom of your screen. Once you click on that, we'll let you in. You could ask your question directly. If you prefer to type your question in, type that into the live chat on YouTube. We'll watch and he'll read them back to me. And while we're waiting for questions to come in and for more people to join us, we'll start out taking a look at the pre-market report, see what's trading in pre-market hours, see if we could get some insights. Then we'll go to any questions we have. If we don't have any questions, I'll kind of continue on some of the discussions we've been having in the most recent pre-market shows about risk management, portfolio management. Okay.
Perfect.
So let's start out with the pre-market report. These are stocks trading in the pre-market hours. We have a list of our most active stocks, our biggest percentage gainers, biggest decliners. Coming down here, I see 100 stocks made our percentage gainers list, 58 on the decliners. So right now, from this perspective, we're looking like we're set up for bullish bias at the open. But if we look at this list, we will see that there are a lot of stocks in there that are small cap stocks. So these are the market caps. We do have ETFs listed in here, some leveraged products. It could be a closed-end fund, a preferred stock. So anything that's listed on a major U.S. exchange, if it's trading in the pre-market hours and it meets our thresholds, it could make this list. So what we want to do is narrow the list down to a smaller group of stocks. And to do that, we could use the filters above. And as an example, I'm going to use this filter in ETF. When you click on it, click on that, you get a list of ETFs to choose from. And the top of the list, you'll see some broad-based ETFs. Then there's some sector ETFs. If you prefer to filter out by your watch list, if you create a watch list, you can click on here and choose your watch list. But let's stick with this one in ETF. I'm going to select SPY. Click on that. The list below. Let me see. I might have to refresh my screen because let me refresh my screen. I think I had this up too long. So when you click on that, click on SPY, and the list below will get filtered by stocks. These stocks that are holdings in the SPY ETF. So which are the S&P 500 constituents. So here we see 26 stocks made our percentage gainers list, 17 on the decliners. Again, this looks like we're set up for more bullish bias at the open. And I think, the big news story there is NVIDIA up. It looks like we're around 30% now in a pre-market. They reported earnings and they are a big beneficiary with this, AI boom in investments. So they gave, I think most of it is coming from their guidance. They beat earnings, but their guidance is very positive. So there you go, up 30%, which is I think that's going to really get her close to $1 trillion market cap soon.
Yeah, no, it's being priced for, perfection.
Yeah.
I
So
was looking at it before the earnings, and it was, it's PE and everything, it was very pricey to begin with, and now it's even more pricey. I mean, obviously everyone likes the AI, and the future looks really bright, and people are paying for that, future.
yeah. So people are excited about that, and we see lots of companies that are seem to be positioned to do well from AI technologies. They've been getting scooped up, right? Even Meta, Google. I think Meta and Google, they have those open source, like what is it, like TensorFlow, I think, on Google. What's it called on slipping my mind on Meta, but I think Meta actually, their code is used a lot on these like AI technologies, and of course Microsoft. So very positive today, coming from Nvidia's earnings. And just coming up here, this is the pre-market, you could say market breadth, and we see 532 stocks are trading higher in the pre-market hours, 390 are trading lower. So that does confirm, so far pre-market activity is pretty positive. And as far as shares go, 124 million shares are trading higher, 63.8 million are trading lower from yesterday's close. And if we look at the sheer, dollar value of the shares, $7.5 billion worth of shares are trading higher in the pre-market versus 1.3 billion of stock in dollar terms is trading lower. So from this perspective right now, balance is way to the positive side. And I think a lot of it, I don't know how much of this, but a lot of it might be Nvidia, just because of its big market cap, and you see 8.5 million shares trading in the pre-market hours already. So let me see if we have questions.
We did Sarush, a question popped up kind of off topic, but he was asking
Okay.
when you were working on Wall Street, which you did actually trade on the floor of the Amex. It wasn't on Wall Street, but it was on what was the street out in front of Wall Street? Church Street or Trinity Place? I forget where the Amex was.
They consider all that Wall Street.
Yeah, I know.
So
what types of strategies were the funds using and institutions at that time? He's asking.
Yeah. So our role was market makers. So what we were doing was as a member of regional exchanges. So we're members of the American Stock Exchange. At one point we're also remotely members of the CBOE exchange. We had a seat on that. Before you're a member, you could buy a seat on the exchange, which made you like gave you ownership in the exchange.
Yeah, you can either buy or lease the seats.
You could buy or lease the seats. They don't have that anymore because the exchanges, they were nonprofit organizations. Now they demutualized when public. And we're also members of the Philadelphia Stock Exchange, which became NASDAQ. We had an operation on the BATS exchange. So at least what we did was we were in the role of a market maker. And as a market maker, we did, and it transitioned over time, but we basically, created bids and offers, provided liquidity to the exchange. So when customers were trying to either, get in or out of risk, we were one of the market makers generating prices willing to buy or sell that or sell that risk. It could be customers, it could have been another market maker or a hedge fund where trying to access the markets and needed bids and offers. So we're part of that price discovery process. We weren't the only ones. There was competition, so the exchanges have many market makers, and then of course you have other players putting in bids and offers on the limit order book. So all of that became a function of price discovery. So as far as hedge funds and so forth, there are so many different funds out there concentrating on their specific niche, that I couldn't even speak to that, because I don't think all of them do the same thing or have the same models or even the same focus. And finance is very broad. I had friends, we were in the option space, but I had friends worked on Wall Street, and they just concentrated on the bond market, fixed income. They had no idea what's going on in the options market or derivatives. They didn't know, how to price options or the volatility. Their whole focus was on bonds, and really I didn't understand a lot of the things they did either, with distressed debt and stuff. They would go into it, and I had no clue what they were talking about. So finance, it's very broad spectrum of strategies and focus. So we had specifically, we were members of the regional exchanges and focused on the products that they offered and making markets in them. So we would have to understand how to price them. So for example, the American Stock Exchange, they had a big options derivatives business, but they also pioneered listing ETFs, right? So they were the first ones to create ETFs and list ETFs. They listed closed-end funds. So a lot of closed-end funds were listed on the American Stock Exchange. They tried listing structured products, which those didn't really take off. I know we started making markets in them and pricing them, but the structured products didn't really take off on as far as like listed products go. They tried listing hybrid products, and then indexes were big too. I think Philex, when we were on the Philadelphia Stock Exchange, they had some really successful indexes in the beginning, and I don't know, they had like the semiconductor index. What other? They had the OSX oil index. So we traded in those.
Yeah, the bank index was one.
Bank index.
I mean, and then they tried other ones, right? There was a box index created for computer makers. There was an airline index. So they tried a bunch of different things.
Yeah, some of them didn't work out. So a lot of the things that they listed, some work, but there are a lot of things that don't work. There's always a lot of stuff that don't work, that you try. They're not all successful. And one of the big success, CBOE, probably the right thing they did was when they created the VIX index, which also was something different, because the VIX index itself is not an actual basket of stocks. It's a calculation derived from option prices, and then goes through this formula and just tracks. It's just tracking a number, really. So you wouldn't even usually, an index, you could like recreate the basket. You would be able to say, okay, these are the stocks in this basket, and I could actually go and buy that index. I could replicate it and buy that index. With the VIX, it's not even like that. It's like this dynamic calculation that's moving around as options are moving around and so forth. So there's no way even to replicate that index and hold that. You're just trading a number. It's like a number that's tracking things. So
yeah, I would say the one interesting thing we did see, and mostly because we were making markets, we were on the other sides of the trades.
yeah,
But it was very early on, and we saw, well, first it was multiple listings, right? When we started, everything was listed on one exchange. So then they started listing products on multiple exchanges.
right.
And so at first we saw that, some exchanges were slower at times than others. So
Right.
at times you could be on the other side of a stock move and it was a delay. So you sold or bought an option at what was a bad theoretical price because we had bids and offers out there.
Yeah.
And so there were people upstairs taking advantage of the slowness of price feeds, exchange feeds, and
Yeah,
that
there
went,
was
and then they wrote books about it later. But we did
right,
see that early on and
right.
made adjustments. Right, we widened out our markets and tried to stay away from the other side of those trades. But that was happening, which was interesting.
Yeah, exactly. Like when we were talking about, I think, arbitrage opportunities, usually in arbitrage where you might be able to buy something and sell something simultaneously that creates almost like a near riskless opportunity. But usually that exists because there's some kind of a technical hurdle that exists and somebody figured out a way to get around that technical hurdle, right? So it doesn't just sit there and exist and it's easy to execute. Usually there's something there that makes it difficult to execute because there's some kind of a hurdle, right? It could be regulatory hurdle, it could be a technical hurdle, but that's why it exists. And then people try to figure out ways, and most of the time it involves you need to have the expertise in there to recognize it and map it out. And it's a big initial capital investment to get around that hurdle to capitalize on that arbitrage opportunity. So it wouldn't exist there to a regular customer where you're sitting on your terminal and like, here, you could buy this and sell this simultaneously and voila, because that would get that, if it was that easy, there are lots of machines even ahead of you that would have exploited that. But as far as like Will was mentioning, there were instances, and there might be instances going forward where an arbitrage opportunity exists, but it's because there's some kind of a hurdle, some kind of difficulty in the markets, some kind of friction, and you need to figure out a way around it. I'll give you, I think, like a good example was, maybe I shouldn't even bring his name up, but Sam Bankman, for one of the ways he started out, I think he was working for Jane Street, or this might have been afterward, but
He was working at Jane Street.
yeah, and there was a big price discrepancy between Bitcoin in the US and in Asia, right?
It was Japan specifically, right?
Japan, right? And so Bitcoin, was trading at one price in the US, and it was trading at a higher price in Japan, in the Japanese yen. But there was a hurdle. It wasn't easy because the systems were not connected there. There were different exchanges on there, and there was different exchanges here, and there's no way to do it electronically to exploit it. So I think what
Yeah, you had to cold store the Bitcoin here, get on a plane,
and
upload it in Japan and sell it, right? I mean, that
yeah,
was basically
exactly.
it.
The only way to do it was actually remove it from the exchange, the Bitcoin, put it into storage, go to Japan on the exchange, upload it, sell it. But then there was another hurdle there. How do you get that money back? Right. So you would take your US dollars, put it in there. You'd have to physically fly over with your hard drive, put it into the Japanese exchange, sell it, and then you had to go through the banking system to get the yen out and convert it back to US.
Yeah, and to make it riskless, you'd also have to hedge, right?
And you had to,
I don't even know if there were,
the
I
hedge
don't even
on
know
at
if there
the
were
time.
futures at that point, right? So
Yeah,
you
you might
couldn't.
have had to take that risk, of, transferring it over. So another thing that they had to do was say, okay, well, how do I get it? Then you have to take, because it's a digital asset. So you got this money, you have to take it out of the exchange and put it somewhere, right? You can't take it cash. So you had to convince the banking system in Japan. You have to explain to them where you're getting it. You can't just put it in there. They have regulations and rules, and they want to know, well, what are you doing? Where is this money coming from? And, and then after that, you have to get them to agree to let you pull it out of the Japanese banks and transfer it back to the US bank and convert it to US dollars. So then you have to convince them to let you do that in Japan because they have regulations, because you're doing it in millions of dollars. And then in the US, they wanted to know, well, where's this money coming from? Like, what are you doing? You're depositing millions of dollars in here. So all these hurdles, because it was not right now, it wasn't part of our infrastructure. You had to figure out a way to get around it. And that's why this opportunity existed, for people who could go in there, establish the process, work, find the banks to let you do that, get through the regulation, be able to, and you had to know technically how to do that, how to, take out your Bitcoin from one exchange, fly out there, upload it to another exchange, without, getting your Bitcoin stolen or whatever. You had to know how all that works, right? And that didn't last forever either, right? Because eventually more and more people figured it out. But those are like,
No, eventually you had to steal clients' money to stay in business.
huh?
Eventually, it sounds like you had to steal clients' money to stay in business.
Yeah, exactly. So, and those were, when we seen arbitrage opportunities, and we always look for, those are the best if you could find them. But usually it is because there's a lot of things you have to figure out that other people are not figuring out, right? To make it work. And then you have to have normally a big investment in the infrastructure to be able to capitalize on it. Because if it wasn't a big investment, if it's cheap to do, it'll go away pretty quickly. And it only comes from when you have a deep understanding and expertise knowledge in it, right? So it's not going to just pop up in front of your face and say, here it is. You really have to have more expert knowledge than even people in the business to make it work. Because you're also competing with other people that are in the business. So if they didn't figure it out, you're like, how do I solve this problem? How do I get around it? How do I solve this problem? So that was, I think that was happening also in ETFs. ETFs, when they first started trading, in the beginning, people couldn't figure out how to price them even. So the people who knew how to price them, were doing really well. And then people figured out how to hedge them. Other people didn't know how to hedge them. And then the models kept developing and developing. At this point, they're really trading mostly closely to NAV. So I think like, you could go into the ETF's website and you could see how close the actual ETFs trade versus their closing NAVs. So the tracking error is like almost zero, very small. But initially they were big, because people didn't even understand them. But yeah, it's a good question. What we focused on was the products that traded on the regional exchanges that were members. And our role really was we had to create models, how to price these things, where we're willing to buy and sell them, and how to manage our risk internally. And then as market makers, we develop software and infrastructure and streaming processes that could do that electronically, because then remember everything moved to electronics. So market making right now, it's all electronic. It's machines that are recalculating and reproducing quotes. So
that took up most of the time. We're right up against the opening bell, my friend. Great job. It was interesting.
Yeah. All right. Well, everyone, thanks for joining. Stay safe out there. Thank you for the question.
Tomorrow's the last trading day of the week, and then I think Monday's off, isn't it? It's a holiday.
Monday's off. So 3-day weekend coming up.
So what's your over under on this? What chance is this thing going to be solved, this debt crisis, by June 1st, or does it even matter?
I mean, I think so. It's not like they're not aware of the consequences if they don't.
Does the media tend to fan the flames? I mean, you get on and they're like, every day. They
sensationalize it. And I think that, both parties have to look strong for their constituents, right? So I would almost expect it to be heated up until the end, or it's going to look like somebody caved in, right? So both sides have to show that they remained, hard right up until the end. I think that they're gonna come up with a solution right before.
All right. Well, there you go. All right. Well, we'll see everyone tomorrow. Remember, thumbs up for Market Chameleon. Subscribe if you're not subscribed to the YouTube channel. Great job, D, as always, my friend.
All right. Thanks everyone for joining. Stay safe out there and hope to see you guys tomorrow.